Is DraftKings share price drop a red flag or simply a hiccup for an otherwise bullish trend? Let's talk about it. Welcome back, guys. We're here to talk about the recent developments with DraftKings. It's been a minute since we've talked about them on our channel, but let's get into it here. So following their Q4 earnings release and their guidance update, DraftKings saw a more than 5% drop in share price. So is this a sign of trouble, or is it maybe just a minor setback kind of in a larger bull market trend? So let's break down those details here and talk about what this means for investors. So what exactly led to the 5% decline in share price?
Yeah, that 5% drop was really just a knee-jerk reaction to the headline news. The report was good. I think what happened is we had a mixed report where revenue missed by a really itty-bitty margin, but margins were impressive and guidance was good, so investors bought the dip.
So how does this kind of recent price action fit into the broader market trend for DraftKings?
Well, DraftKings is in an uptrend. It's driven by its results and by the analysts. The analysts since Friday have come out with several price target increases that are going to continue to lead this market higher.
So despite the decline, though, DraftKings reported nearly 50% year-over-year revenue growth. So what all goes into that?
Well, right, Chris might want to elaborate some on this, but it's about expanding into new territories and deepening penetration. So the company has a dual tailwind, and that tailwind will continue to blow this year. I know they're getting ready to open up some new markets. Where I live in North Carolina, we've been seeing a bunch of ads recently. And I think that we're going to add, I think with Puerto Rico, about 4% of the addressable market in North America, which is a pretty big gain for them this month.
Yeah, DraftKings is increasing the number of users that are using their mobile app and the mobile sports book. And the thing about that is that's not necessarily business that they're taking away from other sports books, because a lot of people that enjoy sports betting, they have accounts on more than one sports book at one time because they want to have the different opportunities that are available to them to maybe get different odds with one sports book or another, and to also double their winnings and all that stuff. So the fact that DraftKings is increasing their users doesn't necessarily mean it doesn't mean that the pie is any smaller for them.
Mm-hmm.
Yeah,
right.
and like Thomas said, it's you've got North Carolina that will go online with the mobile sports book, and we're still not even talking about some of the other stuff. I think we'll probably hit that a little bit later, in terms of how big their market can get.
So considering their adjustment in valuation and the company's performance, how should investors kind of view DraftKings' growth prospects and their market positioning here?
I think they should view it very well. I mean, as Chris was saying, that they're growing their footprint, but they're also deepening penetration. They're not necessarily taking business from themselves or from other sports books. They're also investing in growth. They're getting ready to buy it's called Jackpot, another
Jackpot,
yeah, Jackpot, and that's going to add new business, new opportunities for cross-selling, help deepen their penetration. One of the details that I saw was the hold rate improved, and the hold rate is just the amount of money that bettors are putting onto the platform the company gets to keep. It's like their margins are improving, and that all plays into the long-term outlook.
So another area I kind of wanted you guys to provide some of your insights on here is that insiders that are owning a significant portion of the company are starting to sell. So how is this going to affect DraftKings in the near term?
I mean, I don't think very much. It's pretty tightly held by insiders based on how the company was started and how it's been grown. Right now, they're selling small amounts into the rally. I mean, good for them. They're making bank on their business and their growth. Until they start like dumping in mass, I don't think it's going to be a big headwind. But
I was looking before we started, I was looking at that, and I see that a lot of the selling looks like it's sort of organized, contractual, 105B type of selling. So I don't think it's, they're not dumping the stock because they don't believe in the stock's prospects. I think they're just dumping it because they're trying to put more shares out onto the market.
Mm-hmm.
Yeah. Just in general, I mean, insider selling isn't the red flag that it used to be in the old days. there's too many people watching. There's too many regulations. They have to file these things in advance. It's not like they can just come out there and start dumping shares.
Right.
So yeah, I mean, it's been factored into the market. It's them taking the profits, and good for them. Yay.
Okay, what else do our viewers need to consider for DraftKings?
Well, there's a couple things that I would look at. Number one is, as Thomas was saying, you have to look at the addressable market, not just now, but going forward. You've got Texas and California are still not in play. They're not going to be in play this year. The earliest Texas could come online would be 2025. That's just a function of how their legislature meets. California, it's got a pretty heavy lift before they're going to allow mobile sports books, online sports books of any type. But having said that, it still looks like there's a good opportunity in Georgia this year and potentially Missouri. What that means is that you might see DraftKings sales and marketing costs go down a little bit. When I was looking at their balance sheet, that cost was up year over year, but it's been down in the last couple of quarters. DraftKings themselves is saying it's costing them less to do their sales and marketing to existing customers. So that's good. So it looks like their sales and marketing costs may come down a little bit that way. That's something for investors to look at. Jackpocket doesn't come on board until I think 2025 is what I was looking at, but I could be wrong about that. So investors shouldn't expect that much of a lift in revenue from that source this year. Overall, I'm maybe not as big of a fan of the stock as Thomas is. It's sort of one of those things. It's funny because it's a sports betting site, because I kind of look at the betting and I'm looking at the analysts raise the bet. And I think I'd probably take the under on that right now. But just because, again, I don't know how many new markets they're going to get into this year. But if you're a sports fan and you're a sports betting enthusiast right now, DraftKings is one of the only pure plays out there, and it looks very solid. I'm sorry, one more thing, Lacey, don't want to get long-winded on this. One thing to watch is going to be DraftKings free cash flow, which they say is going to start becoming positive in 2024. If that happens, and now they have free cash flow that they can start using to reward shareholders in different ways, then the stock becomes a little bit more interesting for me. But for right now, I'm probably more inclined to bet on DraftKings than I would be to bet on the stock.
All right.
Right. One of the things that Chris made me think of in this right now is that DraftKings in its price action has got a pretty fair amount of momentum. So this is kind of a momentum play as much as it is a growth or a valuation play. So investors are probably going to want to wait for dips to buy. And certainly whenever the stock price surges, use those times to take some profits.
Yep.
All right. Well, thank you everyone for tuning into this DraftKings update. As with any investment, it's crucial to keep an eye on market trends, analyst insights, and internal movements within the company. But for more updates and analysis on DraftKings and other market movers, be sure to subscribe to our channel, and we'll be right back here with more. Thanks, guys.
Yep. See you next time.